Hi guys, it's Mark Shawson. It's August 24th, Monday, and we basically had 3 days of pandemonium in the markets. The Dow Jones has fallen from 17,250 level to about 15,250 intraday today, a 2,000 point move in 3 days, or about 12% haircut in the Dow Jones Industrials alone. The Euros moved from 110 to 117. No surprise to us. We were predicting from the double bottom back in March, April in the euro versus the US dollar that we were projecting the euro back to the 120 level. It did get there faster and harder than we expected, but nonetheless, when the markets put in these patterns, the outcome is pretty much set in stone. So anyhow, we're taking a look at our outstanding position here in the euro versus the British pound. If you recall earlier last week, we identified this double bottom at about the 69.50 area in the euro versus the British pound. And then after a pullback, we then identified this inside day bar. And then following the inside day bar, we put our buy stop just above the high at the 70.96. That established our core position. And as we indicated, the first resistance, which sliced through very quickly, was the 72 level, then about the 73.5, and then finally about the 75 level is going to provide the third level of resistance. We do expect this to go higher. We did start peeling out of some positions at the 73.67 level today. We got rid of about a third of our position right there. So we took about 300 pips out of this market in about 3 days. Not bad. So that's the implications of these patterns that when they show up, by definition, a double bottom is a bottom. And that underpinned this market. Once it shot through the neckline here, we were off to the races. So it'll be interesting to see where we go from here. We might hit pockets of resistance still on the way up. It's been a pretty steep incline, but we'll keep an eye on it there. So we did get rid of some of our positions at the 73.67 area, and we'll be watching this closely. We are currently looking at the NASDAQ 100, and as you can see, it's been a wild and woolly last couple of days. The market has fallen precipitously, about 3% or more in the last 3 days alone. We did make a call back July 26 right here that we were very aware right here on this key reversal down. This looked to us like a very ominous sign. In fact, that was the title of a special video report we put out on the stock market. We started denoting this reverse wedge triangle formation in the NASDAQ. There was also a bearish divergence between the Dow Jones Industrials and the S&P and the NASDAQ. Back July 26, we noticed that while the NASDAQ made a new high, the S&P basically came back to its old high, and the Dow Jones Industrial was well off of its high, which was the first indication of a bearish divergence in these indexes. Then we also noticed this reverse triangle forming. We were a little bit premature, but as it turns out, we were bang on that this is indeed a reverse wedge triangle. It's also called a megaphone formation, and it is very bearish in its implications. And we said that if the retracement came back to the 4,300 level, that it would be likely that we could see a measured move about the same. So basically, we measured out the top to the bottom between here and here, and it was about 400 points from about the 4,300 level to the 4,700 level. And based on that measured move, we said that the decline, if it came back to 4,300, would likely take this 400 points lower to the 3,900 area. And guess what, guys? It hit 3,902, bang on our number, and it has bounced since then. So this formation played out exactly what we're looking at. And we actually are looking at taking a reverse position right now. It hit my 3,900 target. I'm looking at an intraday formation, and we did initiate a long position here. Let me show you exactly what we're looking at. So we're looking at the intraday 60-minute chart on the NASDAQ 100 after this precipitous fall, as you can see, from the 4,500 level all the way down to 3,900 in just a couple days. But as we always say, the market points to where it wants to go, and we think that this guy right here will basically underpin some of the market action for the next couple of hours. So we're looking at this support area right now at about the 4,000, and we got lightly long this market at 4,050 with a stop just under the 4,000 area. Again, banking on this price as controlling the action for the next couple of hours. So we think that our target of 4,200 is attainable. This is not typically the kind of thing we do. We look for longer term plays, but we think that this market has overreacted. It hit exactly our target point of the 3,900 level. We did see this strong key reversal at the 3,900 level, which seems to be underpinning prices now, and we've taken a light position long the NASDAQ 100 for a short move here. So that's it for tonight. There's no new positions other than the NASDAQ 100. Things are way too volatile, and we'll be back tomorrow to take another look. So we wish you a healthy and prosperous trading day. Take care. Bye-bye.